Ladies and gentlemen, good day and welcome to the Q4 and FY22 earnings conference call of Dhruv Consultancy Service Limited, hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kiran Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone. I would like to welcome Mr. Pandurang Dante, Director of Dhruv Consultancy Services Limited, Ms. Tanvi Auti, Managing Director of the company, Mr. Rajesh Sindhu, General Manager, Finance and Accounts. Ms. Tanvi, over to you, ma'am.
Thank you, Vastupal. Good morning, everyone. I'm here to talk to you about the Q4 FY22 results of Dhruv Limited. As you all are aware, that we migrated from BSE SME to the main board of BSE and listed on NSE in November 2021. So since then, we have adopted the new accounting standard of Ind AS. And this is our first full year balance sheet under the Ind AS accounting system. So I would like to tell you that we achieved a total revenue of 75.57 crores for the year ended 31st March 2022, with a net profit of 5.75 crores and a total comprehensive income of 6.25 crores. With this, we achieved the basic earnings per share of 4.03. So the revenue of the company has gone up by 18% from 63 crores to 75 crores. And this is mainly due to the progress in the NHI projects under the Bharatmala Pariyojana that has been announced. The total expenditure has gone up by 18% from 56 crore to 67 crores. This is due to the increase in the number of projects and the order book. The employee cost has gone down by 3% due to reduction of staff owing to some projects of MOT which had been completed last year, and hiring of sub-consultants for projects who are in remote locations. The administrative expenses have gone up by 30%, predominantly on account of professional fees. Due to the this is was the listing fees that we had to pay due to the migration, and miscellaneous expenses have gone down correspondingly. Traveling expenses have gone up, as earlier we were working only in Maharashtra, but now we have our presence in 23 states across the country. As well as survey expenses have increased. We are proud to say that we own machineries like falling weight deflectometer, then retroreflectometer, ATCC machine, and the mobile bridge inspection unit. The EBITDA margin has also gone up from 9.33 crore to 10.80 crore. This is due to better cost control and better profit margins. Now that we are able to achieve a higher technical score in our bids, this helps us to achieve better profit margins. So, along with that, I am happy to share that currently the company is working on 7 expressway projects. Some of them, namely Delhi-Dehradun Expressway, Delhi-Mumbai Expressway, Amritsar-Jamnagar, Amritsar-Bhatinda, Raipur-Visakhapatnam Expressway. And we are hoping to bag a few more expressway projects this year. As already said earlier, the company is also diversifying into solid waste management and solar EPC and structural repair projects. Also, till date, we have submitted 342 crores of bids for which results are awaited. So we are expecting a good success rate this year. As well as 51 international tenders have been submitted under multilateral development banks, that is Asian Development Bank, World Bank, and African Development Bank in Southeast Asian and African countries. So that's all from my side, Vastupal.
Should we open for Q&A, ma'am?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yashwanti Ketkar, an individual investor. Please go ahead.
Yeah, hello. I just wanted to ask what has gone wrong for Q2 FY22 for such a dismal performance as compared to the Q3 and even compared to the previous corresponding quarter. Am I audible? Hello? Am I audible?
Yes, ma'am, you're audible.
Yeah, is Rajesh ji on the line?
Yeah. Should I answer?
Yes, please.
Yeah. In the Q4, we have adopted the expected credit loss, which has been not earlier we are adopted. Due to the accounting standard has been changed, the auditor has asked us to implement the ECL policy in the company. So we have make a provision around 1.5 crore rupees of ECL expected credit loss in the Q4, which has not been done in earlier period. So that's the reason the quarter 4 it has been in the negative side. The main reason is that.
Yeah, but even on an operating basis, we have gone very bit wrong. Like if you compare the corresponding year, we have earned a profit of around 7.6 crore. In the previous quarter, we have a profit of around 2.93 crores. So that comes with me 0.27. I believe this adjustment is coming after the operating.
In the Q4 only.
Yes, after operating profit, right?
Yeah. Because it is a notional entry due to the index. So
yeah,
we have to force our audit committee has forced us to pass the ECL provision in the books of account of the various debtors and current assets which is lying more than 12 months. So this we have opted the policy and we have made the provision on the prudent side.
Yes, but what I'm asking you at the operating level, if the profit has come down to only 27 lakhs. So that is where I just wanted to understand where we have gone on the variable cost side, what has gone wrong, and even on the top line basis.
See, in the top line, it is a moderate performance. There is no highly increase in the revenue side. And it definitely at the cost side, if you look at the employee cost, we have given the revision in the salary and we given the effect from the January itself. So there is a increase in the 50 lakhs about in the employee cost. Apart from that, there is some provision has been made for the professional fees for the service which has been rendered earlier. The bill which has not been sent to us, it has been not submitted to us, and there was a delay in the reconciliation with the various party. So all the bill has been recorded in the quarter 4. So the whole expenditure which been shoot up in the quarter 4. So this is the main reason.
Yeah. Also, in Q4, if you can see in the quarter 3, lot of new NHI projects were awarded to us. Maximum projects are awarded in quarter 3 and quarter 4 after monsoon. So before the monsoon starts, the infrastructure spending is huge. So for quarter 3 and quarter 4, the expenses would be on a higher side, and since they are new projects, the revenue recognition takes time slightly. So expenditures would be on a higher side only because the number of projects has increased in the company.
So you mean
the professional fee?
Yes. So you mean this cost will settle down in the quarter 1 and quarter 2 of the current year?
Yes. Because the revenue would increase, and yes, quarter 1 and quarter 2 before the monsoon, a lot of work is going on, so revenues will also be good.
So if I wanted to understand it correctly, it means that whenever you receive any contribute, so that quarter and probably the next quarter, the expenditure side will be high.
Yeah, at least 3 months.
Into the revenue in the following quarters.
Yeah, at least 3 months it would be higher because there are initial mobilization expenses for site setup, office staff, then we have to take vehicles and extra all those things. So mobilization expenses are slightly higher whenever any new project is started. And we started with 7 new expressway projects. These are greenfield projects, so where accessibility is a major issue. So the expenditures are much larger, and some projects are in Northeast as well, where there are terrain difficulties.
Mm-hmm.
Yeah.
And how would you quantify your current order book?
Unexecuted order book is 200 crores.
Unexecuted. And that is for the years? Is over the years?
Next 3 years.
Next 3 years.
Yes.
And going back to the operational level, what is the EBITDA margin on an average basis you can think the company can achieve for FY23? I'm not talking about a quarter-on-quarter, but with the full year is under consideration, what can be the company's expectation where they were able to maintain the margin?
Yes, we would definitely be able to maintain the margin. This would not be a platform where I'm allowed to speak about projections. But yes, I would like to assure that we would be able to maintain margins, and if at all we are successful in international bidding, so we are expecting higher margins.
And what is our working capital cycle?
60 to 90 days.
60 to 90 days.
Yeah, for NHAI.
And how much is the debt paid off during the year? Because I see there is some saving coming on the financial cost.
Yeah, Rajeshji, can you answer that?
Yeah, just a minute.
Yeah.
The date we repayment is around 2.5 crore rupees during the financial year.
Okay. And any plans to reduce further in the FY23?
Yeah, we are planning to do the preferential allotment. So it's definitely the working capital will be in the zero side in the future.
Okay. And if I may ask one more question, what is the trade you see going forward for bagging new contracts, new orders?
Yeah, so if you must have read in the news as well, so phase 1 of Bharatmala Pariyojana is under development, and only 8,000 kilometers of projects are awarded. Balance 12,000 kilometers of projects are yet to be awarded. So you can see the quantum that is going to come in the next 2-3 years for NHI and MORTS projects. And now the government is coming up with a new scheme for consultants, that is PMC. So wherein the feasibility study and the construction supervision would be done by the same consultant. So earlier it was different, but now it will be bundled into one package. So in PMC projects, the revenues are higher, close more than 15-20 crores also in some cases.
Okay.
Yeah.
Okay. And I just wanted to understand one more question. How many employees are on a fixed and how many are on a variable basis? Calculation and employee cost?
Yes. So approximately we have 300 to 350 employees working, and out of them 200 are engineers. So 70% of them are on our, but 30% are on contract.
Okay. Okay. I think that's it from my side. I may come back on this.
Yeah.
Thank you so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Am I audible?
Yes, sir. Please proceed with your question.
Yeah, actually, congratulations on migrating from SME to the main segment. So I'm new to the company, so my questions might sound a bit basic. Sorry for that. I just wanted to know the basic of the company. How much time do we take to complete an order? What is the average time to complete an order?
Yeah, so we are working in we offer two major services. One is the feasibility study and preparation of project report, and second is construction supervision, that is for ongoing construction projects as well as maintenance projects. So for DPR, usually the time is 1 to 2 years. Here the payment is on milestone basis. So as and when we complete one milestone, we get our payment. In case of supervision works, the period is 5 to 7 years. So construction period is 2 years, and depending on what the assignment is, after that 3 years or 5 years will be the DLP, that is a defect liability period, wherein our role is quite less, staff is also less. It is mainly maintenance activities. So maximum revenue for supervision projects, 80 to 90% comes in the initial 2 years, and balance 20% comes in the DLP period.
Okay, and ma'am, what would be the revenue percentage share? Like how much will be feasibility study and how much do we get from supervision?
Yes. Seeing the present, the financial year FY22, 80% of the revenue was from construction supervision projects and 20% from feasibility.
Construction. Okay. And ma'am, can you just the amount of orders that we've bidded for, is there? Can you quantify that? How much have we bidded for, and how much can we expect to achieve? What is our strike rate or something? Is that?
We have bidded for orders close to 350 crores, and seeing our past experience, even at a conservative side, we say 15 to 20%, then too we are expecting 50 to 60 crores of orders every year from consultancy.
I would like to add something here. I'm Chairman Dandaute.
Yes, sir. Yes, sir.
Yes, what happened is good news for investors is that we have last year's turnover now 75 crore. So average of last 3 years, we are crossing the average of 3 years, 60 crore. So NHI has one circular of bid capacity. So we are now going to the highest slab of 60 crore and above, wherein our bidding capacity is now 40 projects in a year, which was last year, which was hardly 2 or 3 projects were remained to be bidded. Means we were saturated last year because our turnover was less than 60 crore of last 3 years. So what I can say, the strike rate will be almost double now for the current financial year because of the extra bid capacity available to the company.
Okay, sir. And so for NHI, a road project that we do, how much margin, does the margin differ from contract to contract, or are they nearly similar all throughout?
Our margins, you are asking?
Yes, sir. Your margins, sir.
Our margins normally, that also I would like to explain to the investor. Our bids are not necessarily L1, that is financially L1. We need to have technical plus financial score H1, that is the highest score. 80% weightage is given to the technical score and 20% weightage is given to the financial bid. So if I score technically higher marks, then even if I'm not L1 in the competition, I get that bid. So this is the typical of QCBS, what we call World Bank and European countries they adopt. So we adopted here. We mean Indian government adopted this since last 6-7 years. So now happy to announce that we are scoring technical marks more than 95 because of our turnover. Number 1, number 2 network, number 3 experience, and number 4 the quality CV we are getting from the market. So because of this, our margins which were traditionally I can say 15 to 20% gross in last 3, 4, 5 years, which are bound to increase by 5 to 10% because we are scoring now almost the highest marks in India.
So, sir, that means we can do 25% margin?
Yes. We can, current year and next year, we can consider that 25% margin because we are confident of getting more technical marks, so we are financially bidding on higher side. In rough language or layman's language, I can say 1 mark carries 25 lakh rupees of weightage. So I score 2 marks more, so 50 lakh I can put more. So that is purely a gross profit.
Okay, and just to clarify, sir, this 25% is EBITDA margin, right, sir? Operating profit?
Yes, gross profit.
Gross profit. Okay. And sir, now because we are expecting more orders to come, so how much do you think our cost will increase, or do we get operating leverage?
Operating costs are bound to increase for this inflation. Mainly diesel prices have increased and it has impact on all the sectors, as you are aware. So operating costs are expected to increase by 5 to 7%.
Okay. And sir, do we have any vision for the next 3-4 years that we envision ourselves to maybe reach as a 100 crores, 200 crores company? Any guidance that you can give on that? That would be very helpful, sir.
Definitely. See, I will simply put it this way. You might be aware about the NIP document, that is National Infrastructure Pipeline, published by Niti Aayog in 2017. And then they have given a roadmap for next 5 years, that is up to 2025, starting from I think 2019. And 20 lakh crore is the provision made for the road sector only. Total provision is 100 lakh crore, but road sector is getting 20 lakh crore, which is the highest ever allocation in infrastructure. Out of that 20 lakhs, only 8 lakh crore works are awarded to contractors and consultants. So in next 2-3 years, expected tenders and expected business is almost 1.5 times what we have done in last 3 years. So definitely current year 75 crores, we are expecting it to cross in 3 digits very soon.
Oh, okay. That's very, very good to know, sir. Yeah, that sums up most of my questions. Thank you so much for your guidance and all the best for the future, sir. Thank you.
Thank you. The next question is from the line of Akshay Kotari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So I am also new to the company. My questions would be a little bit basic. So, sir, what would be our unique selling proposition? Like, why would NHI? You did mention about better marks and so can you just explain us how are these marks awarded and track record is seen, or how are these things?
Surely. See, it is a standard practice world over. Sometimes 75% weightage is given to the technical submission, sometimes 80% in India. So let us take example of 80% for calculation purpose. 100 marks are, say, for comparison, 100 is there. Out of 100, 60 marks are reserved for the company credentials. Out of that 60, almost 40 marks are reserved to the company past record. Say, for example, company must be more than 10 years, company must be private limited. If it is public limited, you are getting more score. Then third thing is equipment bank with you. Then in-house manpower or quality people on your payroll. All these things, and of course the financial part, turnover and network. So out of 60, Dhruv was scoring previously 55, 56 because of, say, turnover 1-2 marks and equipment bank was less, which is now complete. So I am happy to announce we are now scoring 60 out of 60, 100% in company credential. 40 marks are reserved to the CV of the personnel which we are deploying. So better the CV of a personnel for the job requirement, we are scoring better. For example, say bridge engineer is required for particular project. If he is having 20 years plus experience, he will score out of out. If he is postgraduate, he will score out of out. He is on company payroll more than 1 year, he will score out of out. So 40 marks are reserved for the, you can say, personnel CV. And in that, we lose, say, 3, 4 or 5 marks because we are taking maximum CV people from the market. That also, I have added advantage that I am ex-government employee. I would have been retired as a chief engineer, agar main rehta tha to. So my colleagues, almost you can say on the verge of retirement, they are treating Dhruv as a second home after retirement, and their CV are scoring 10 out of 10 or 100 out of 100 because they have worked on the entire state level or national level project planning and project execution. So I get that advantage of getting the quality people CV because of my personal network. And of course, what I can say, my client is also, he was once upon a time my classmate or batchmate. So this is how the marks are distributed.
Okay. That is great, sir. Could you explain us like this construction supervision service? It is like if the road is being built, so you would be supervising the road, the built quality and all these. That would be the basic services.
Correct. It is basically monitoring the quality, monitoring the quantity, and monitoring the progress. So these are the three major aspects of the project. So if we are supervising the HAM work, that is BOT model, hybrid annuity model, then we are termed as an independent engineer, where word monitoring is used. And if it is an EPC contract or funded job, then we are also responsible for certification of the quantity of the work done. So without our certification, contractors' payments are not released.
Okay. And we get our revenues only from NHI and MORTH.
Yes. Our major revenue is from NHI and MORTH. They are the major client. Apart from that, we have few clients like MMRDA or Karnataka State Road Development Corporation or some PWD states.
Okay, so these private players, all buildcons, would not be giving us any revenue, right?
No. Okay. It's purely a government, you can say, contract, and purely it is given on the bidding process with full transparency because it's a public money.
Okay. And feasibility study
Same.
It is for the road sector only, not any other feasibility studies.
We have small vertical for port, then harbors, and also architectural wing for some buildings. But it is hardly, I can say, 5 to 10% contributing. The major or core is a road sector.
At the outset, ma'am explained somehow the future leg of growth. We are also venturing into solar EPC and some other things also she mentioned. So can you just elaborate some things more on that?
Sure. See, COVID has given us a good lesson that you should not depend on only one vertical. And we, being a public limited company, and investors' money is there in the company, we decided to work very seriously on other verticals where we can jump in with our credentials, that is financial credentials. So solar, it is deemed today, I will explain mainly the solid waste management and biomining, which is the great area to work. Again, it is controlled by the government sector only, central government and state governments. Through municipal corporations, they are removing all the legacy waste or the dumping grounds which are there since last 25 or 30 years of urbanization. So we targeted that with our joint venture, with our associate company of my brother. They are getting technically qualified. They are in this field since last 3 years, but they are not qualifying financially because of their weak financial. So we, with our associate, have made joint venture for bidding, and we will be the financial partner only, and they will be the technical or executing partner, but 100% revenue generated from the operations will be routed through Dhruv Consultancy balance sheet. So that will give us the stability for next 5-6 years. And we are looking at ticket size of 10 to 20 crore works, which are of B class municipal corporations or A class municipalities. So this is one vertical. Another vertical we are looking at is, which is very near to our area, is repairs to the structures, which is the area having less competition. Lot of structures are coming up in the urban area, mainly the metros and monos and airport connecting elevated roads and you can say mini concrete roads. So repairs to the concrete road and repairs to the structure is the very good area where we can work as a contractor. Again, our associate, my son-in-law is running one small private proprietorship firm, and we have made a MOU with them to bid in a private sector as well as in a government sector for such type of work. So we have got one solid management work last financial year, that is what we are discussing now. Yavatmal city, I think 1 crore or so, small work, but one footstep is already there by Dhruv, and currently we are planning to get at least one work in the repair sector, maybe private, maybe government. And third important thing which we missed in initial discussion is we have bidded for international consultancy works, mainly for World Bank, Asian Development Bank and African Development Bank funded projects in African and Asian underdeveloped countries like Vietnam, Cambodia, in Zambia, Ethiopia. we have submitted 25 expression of interest, and we are expecting to get at least 2 work orders in current financial year.
Okay. Okay. So the associate, that is actually great. The associate company which you mentioned, the JV, how much stake do we have in that JV?
We will be lead partner. Depending on nature of the tender, we will minimum put 51% stake minimum. If tender or clauses of the tender, we can go up to 70. The minimum has to.
Hello. Hello.
Seems like we lost the connection for the speaker. Requesting you all to please stay connected while we reconnect him.
Hello.
Yes, sir. You may please.
Sorry, there was disturbance. So minimum 26% stake has to be kept for other JV partner. So we can hold as high as 74%, as low as 51%.
Okay, that would be great. And majority of our revenues comes from Maharashtra?
No. It was a scenario. It was scenario up to 2020. We had 80% of the order book from Maharashtra, but now our presence is in 25 states of India, wherein Maharashtra is now getting on lower side. Still revenue is there from Maharashtra also, but that is the completion stage revenue or defect liability period revenue. And new works, we have got all the expressway works or iconic works or.
Okay. So just to get a sense, what would be the total market addressable in this segment? Like we are doing around 100 crores or, order book of 200 crores. So what would be the total market and unorganized players, or can you give a sense of that?
Pardon, I could not hear the first sentence. Can you repeat, please?
I'm asking what would be the total addressable market in this case, engineering services, supervision services, and
yes, I can explain. 8 lakh crore, 20 lakh crore is the budget outlay for road sector for 5 years. 8 lakh crores works are already awarded, in which we have order book of say 300 crore. Unexecuted is 200 crore. Normally, the consultancy is 5%. 1 to 1.5% for feasibility reports and DPR, 2 to 2.5% for supervision of construction works, and 1 to 0.5% for proof checking, then post construction maintenance supervision, वगैरह वगैरह. So 12 लाख करोड़ का outlay बाकी है. So 12 लाख करोड़ का 5%, I think 60,000 crore rupees is the market for next 3 years. In India only, in NHI and North. Apart from that, international market, sky is the limit, and other state governments also, we have the opportunity, but we are choosy to see that where the fund flow is there and where the timely payments are there and billing cycle is less, we are working there only.
Okay. And we would be the largest player, or there would be any other player?
We are in Big 5 now. We were among 25 last year. Today we are in Big 5. I can name the competitors' name like SA Infrastructure Delhi, Lee Associates, then Sovil, that is a British company, then AECOM, that is American company, 1 or 2 Singapore companies, and 1 or 2 South companies like RV and Artifact. So there are 8 to 10 players remaining, but as I explained initially, we have the 100% bid capacity balance for current year, so we can take maximum 40 works in a year, wherein our competitors have lost their bidding capacity because they have already scored in last 2-3 years. They have in hand works more than 50, more than 60. Some are having more than 90 works. So they cannot bid now.
Okay. So can you explain this bidding capacity? It is linked to what?
It is linked to 2 things. Main is a turnover of the company. Turnover is, they have termed last 3 years average annual turnover. So I was in qualifying in class of 40 to 60 crore last year. But now since today we have 75 crore and we are the only public limited consultancy firm in India. So our returns are filed earlier. Our results are declared in the May only. So this 75 crore advantage I am taking, and now I have entered into elite class of above 60 crore. Second criteria is number of employees with the firm that we are already qualifying. We have almost 400 plus employees, out of which key professionals and seniors are whatever the requirement is there as per that NHS circular. So these are the only two criteria which we satisfy now.
Okay. Thanks a lot for such a good explanation, sir. Thank you. I just had a couple of bookkeeping questions. The ECL provision you were talking about, which we had in this quarter. So I think we shifted in November 21. So in December quarter, we should have recognized the ECL provision, right?
So the policy has not been adopted in the audit committee. That's why we have not made the provision.
Okay, but the ECL is, what I understand, is based on the past trends. So
correct. So we have the first time adoption in the last quarter, but the policy which has not been formulated. So now the policies are formulated, and that time was the unaudited accounts. Now they are audited. So auditor has been evaluated everything. They make the statistics and all these things, and we have made the provision in this quarter.
What would be the ECL provision? If you can give me the number.
1.5.
1.5. And generally, this would be, are we, what we can say, thinking that we would get this money, or?
We will get this money, but it has been our accounting standard. We need to make the provision.
Yeah, I understand that.
Yeah.
Okay, thanks. I'll join back in the queue. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Guneet Singh from Counter Cyclical PMS. Please go ahead.
Hi, thank you for the opportunity. First, I just have one quick question. Firstly, you said you have an order book of 300 crores, out of which 200 crores have been executed, or 200 crores are still pending in execution?
Unexecuted.
So, when can we expect the execution to happen in the next 12 months?
No, in the next 2.5 years. 2 or 2.5 years.
Next 2.5 years. All right. So, we have a revenue of 75 crores as of today, and we spoke about 3 other segments which the firm is venturing into. First is solid waste management and solar. Second is repair of structure, and third is international consultancy, apart from the government consultancy that we have. So, can we get a guideline as to how would these sectors contribute to the total revenue for, say, the coming years in terms of percentage, and also in terms of the total quantum?
What I can say, it is purely budgetary provision or projected number, but we have already entered into solid waste management, and we are expecting, say, about 50 crore of order book current year. But to realize it into a revenue, it takes time. So what I can broadly say, these other sectors should contribute to 10 to 15% for current financial year, and should go on gradual increase year on year as we get more mature and more eligibility and more areas to work.
All right. And I'm sorry I missed this out, this might have been discussed. So what is the projection for current financial year in terms of revenues we're looking at and in terms of growth?
It should very near to touching to triple digit. Definitely more than current financial year.
Definitely.
Yeah.
All right. That's great. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Apurva Mehta, an individual investor. Please go ahead.
Yeah, I have just one question. My question is, how many activity projects we have currently, and what is the average current competition status?
Tanvi?
Presently we have 75 projects going on, and the average revenue for our per project bidding cost is 5 to 6 crores, and we are expecting it to increase to 10 to 15 crores in this financial year. And what was the second part of your question?
Average current completion status.
Yeah. So competition status for every project, 7 to 8 bids are received, and as sir rightly mentioned that the competitors are SA Infrastructure and then Sovil Limited. Then there is TPS Engineering, K&J Projects. Even they are not listed companies, but they have a turnover close to 80 crores. With the bid capacity clause coming in now, our average 3 years turnover is going above 60 crores. So we can bid for more number of projects as compared to our competitors who have saturated their bid capacity. So we are expecting that there would be less competition this year.
My question is completion status of current projects.
Completion status of, I will explain. Completion
Yeah.
status of, so we have 70 projects in hand which are in progress, out of which say 10 are DPR and 60 are supervision, or 50 are supervision and 10 are maintenance supervision. So this is the broad classification of the order book. And out of 50 projects, construction supervision projects, 30 are completed. We call in our engineering term, it is a COD or PCOD, provisional commercial operation date or commercial operation date. So out of 70, DPR 10 to 10 completed, but they are on paper, they are ongoing since some land acquisition issues are there, some forest issues are there. So 99% work is completed, 1% remaining for DPR section, DPR sector. Supervision, 30 projects are completed, and maintenance supervision is a continuous activity. It is a perennial or you can say infinity activity. It is going on continuously. Even though we complete our assignment, the maintenance part remains there.
Okay, yeah. Thank you.
Okay.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Akshay Kotari from Envision Capital Services. Please go ahead.
Yeah. Thanks for the opportunity again. So I wanted to understand. So you have told that your competitors are having turnover of around 80 to 90 crores, and they have exhausted their bidding capacity.
Correct.
So they must be all in the same position as you are. So how have they exhausted their bidding capacity?
Because their turnover was more, so they bidded for more projects in last 3 years. Of course, they got more projects because they bidded more. But that project's timelines are 3 to 5 years. So they are in progress projects, the projects in hand. So they have 60, 70, some people have 90 projects in hand. Unless they go below 40, they cannot bid now.
Okay, so they reached 60 crores turnover 3 years back only. That is what
Yes. Correct.
Okay.
And that's why they got more projects than us.
Okay. And we are at that inflection point wherein we will get now new projects.
40, because our bid capacity remained is almost 40. See, there is one classic thing happened with the company. The bid capacity clause is applicable only for NHI projects, not for the MORTH projects. Fortunately, our order book for last 3-4 years was flooded with MORTH works, Ministry of Road Transport and Highway, which is the main client. Which number of works in progress, they are not counted in bid capacity. Wherein our competitors had a maximum work in hand, they are NHI works, and we had only 4 or 5 works in progress of NHI for last 2 years. Now we have, I think, 12 or 13 works only. So still we have balanced bid capacity of 28 or 30 projects.
Okay. Thanks a lot. Yeah.
Okay.
Thank you. The next question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Thank you for the opportunity again. I just have a very small question, follow-up question. So these 3 segments that we are getting into, how much do they contribute to the total revenue as of today?
As of today, it is negligible. Only I can say 1 crore out of it is still yet to be realized. So current year only 1 work order is there from the solid waste management. So today it is practically 0.
Okay. And for the coming year, FY23, we expect it to contribute 10 to 15%, right?
Yeah. Correct.
All right. Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Thank you for the opportunity again. I just wanted to ask a doubt in this. So you're saying the competition cannot bid for more projects now. So 2 years down the line, will we also face a similar problem? Because our capacity, how does the bid capacity work? Can you just explain if possible?
Yeah, bid capacity clause is like this. If I have average annual turnover of say 60 crore, which now I qualify, so I can bid for 40 projects in a year.
So you can bid for 40 projects?
Sorry, not bid. I can get 40 projects. I can bid for 100 projects or even more than that. I can get maximum work order of.
Hello. Hello.
Mr. Pandurang, if you can hear us, please do respond. Mr. Pandurang, if you are able to hear us, please do respond.
Tanvi, you can.
Yeah, I think his connection got lost. So 40 projects we can get in one single year, and every year that bid capacity opens. So now the project tenure, earlier it was 7 years. Now it has come down to 5 years. Secondly, as I told you earlier, the ministry and NHI, they are coming up with this new model of PMC works. So wherein the DPR and supervision projects will be clubbed. So automatically this bid capacity will increase then and there, because the project tenure will go up to 9 to 10 years. So then government will have to take a call that whether to remove this bid capacity clause or increase it based on turnover. Also, since sir said that not to put all your eggs in one basket, we are also increasing our client base in India, also bidding for international tenders. We are hoping that in the next 5 years, 50% of the order books would be from international tenders. So steps have been taken in that direction from now itself.
Okay, ma'am. And so the international bids that we've done, what would be an average orders ticket size that we might expect to receive?
Yeah, so if you compare what is there in India right now, so per project we are getting a revenue of 5 to 6 crores. There it is 15 to 20 crores. So and we are carrying out the similar type of assignment. So we don't need any additional setup that needs to be done, but the manpower cost and the traveling cost would increase. So even if that increases, then too the profit margins are quite high, and ADB and World Bank, they are they are good paymasters. So we are expecting that with better profit margins, we'll get higher revenues also.
Okay,
And till
ma'am.
date we have bidded 51 tenders in the last 6 months. Each about 15 to 20 crores.
So, ma'am, we are hoping to get 2 international orders, so we might expect 30 crores order.
Yes, we might. Yes.
Okay, and just one more question on the margin front, ma'am.
Yes.
Sir said 25% gross profit margin. So, from the results, I could pull up the cost of material consumed is not very high compared to sales. It might be 10% roughly. So what all other factors are coming in gross profit, or could you just, if possible, tell me EBITDA margin that we might expect, if possible?
Yeah. So what happened in the last 2 years, due to the travel restrictions that were there, we had to outsource a few projects which were based in Arunachal Pradesh, Manipur, Meghalaya. So we had to hire local staff and local consultants, and that is why the professional fees that you can see has increased significantly for this financial year as well as the last financial year compared to the earlier year. So till these projects are now we have stopped that as COVID restrictions have eased out. So we are expecting that professional fees might come down because we have stopped outsourcing those projects. And employee cost would increase because if the number of projects increase, number of employees would increase. So we can expect a growth there. But professional fees, the jump that was seen in the last 2 years, that trend may go down.
Yes, I would like to add one thing only. I explained that we are now scoring technical marks more and more. Previously, we were scoring 91, 92. Now we are scoring 95. 1 mark carries 25 lakh weightage roughly. So if I score 2 marks more, I can bid for 50 lakh rupees more. That is purely my gross profit. That's why that 25% figure is expected.
Okay, sir. Thank you so much for answering my questions. So thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Vastaval Shah for closing comments. Over to you, sir.
Thank you. Thank you everyone for joining the conference call of Dhruv Consultancy Services Limited. If you have any further questions, queries, you can write us at rastupal@kiranadvisors.com. And once more, many thanks to management team and all the participants. Thank you.
Thank you. Ladies and gentlemen, on behalf of Kiran Advisors, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.